Good morning, everyone. Today is Thursday, January the 28th. It is 10:05, and we're going to go ahead and get started with our very special meeting that we have today with Greg Janicki. And he is going to be bringing us some very important updates, and he's going to be answering our questions today on the lending side of the real estate business. And so what I like to tell everybody is when someone calls me and says, "Hey, Cody, I have this, I've got this credit score, I've got this much money." I said, "Listen, I know just enough about lending to get myself in trouble. Let me get you over to somebody that specializes in it." You want to be very careful about giving people lending information. Now, that does not give you an excuse or a reason or an out for you not to be educated and well-versed in at least part of the process. And so the intention of today's video is Greg is the expert. He's been in the mortgage business for almost 30 years. Correct, Greg?
Actually, just over 31.
Okay, 31 years. And he's been with many different companies. He's owned his own company and had mortgage originator, loan originators work with him. So very experienced. And just a little bit about Greg. You know, I met Greg, it was 2018, I believe it was. And I was actually the listing agent. And I had this multiple offer situation. It was really the first multiple offer situation I ever had. And this agent that the seller decided to accept the offer on, was their client was using Greg. And, you know, I started to get these emails in my inbox, and I was like, why am I getting these emails from this lender I've never heard of? And I would scroll to the bottom and like, where's the unsubscribe button? I don't want to get this anymore. And Greg knows this, so it's not like he's going to be mad at me for telling the story. But then I actually read the email, and that was the difference for me. I've never in my career had a lender that provided this much detail and this much understanding and knowledge of where the loan actually was throughout the process on the buying side. Now, if you've closed a buying transaction, you'll know that the lender that you work with or represents your buyer, they may provide you updates, or you may find yourself having to go and ask for updates. Where is the process of the loan? Has the appraisal been ordered? Where's all that? Where's the loan at? And Greg just proactively does that. He's been in the business long enough to know, hey, here's the questions they're going to ask. Let me beat you to the punch, and I'm going to go ahead and answer those questions before we even have the questions come up. So that's something that we could implement in our business as well. We know the questions that the buyers are going to have, so we can go ahead and be prepared and have those questions answered before they even ask them. And all that's doing is building our rapport. So I've been using Greg pretty much exclusively here in 2020. Greg and I did most of our business together. Most of my buyers were represented by Greg. He did my personal loan for our new purchase, and just been phenomenal. He did recently just switch to a new company, so congratulations to you on that, Greg. And one of the reasons, and I don't want to take too much of your story, but he has the flexibility now where he was lacking with the other company. So Greg, I'm going to turn it over to you, and then we'll go ahead and get started with the session.
Yeah. Well, Cody, thanks. I don't want to go into a lot about me other than to just, you mentioned I've been at it a long time, which means I'm old. What can I say? I've been doing it for 31 years. Yes, I did. I was with the same company for just about 6 years, and I just made a switch. Most of that had to do with the fact that I wanted to grab more control, like I was used to, of the lending, of what happens during the process. And I felt I needed to have greater control. And so that's why I made the switch. I happen to know the folks at the bank that I just joined. I've known them a long time. In fact, the director of operations who heads up underwriting and everything else is one of my wife and I's closest personal friends. We actually hired her in 2004 to lead our underwriting team when I was regional president at First Horizon. So in any event, very fortunate to be alongside with you folks. Cody mentioned him and I met on he was the listing agent. That happens to be a very common way that I've grown my personal business. Nearly 70% of all the real estate agents that I now serve have come from being on the listing side of the transaction. So anyway, we try to make sure we do things that are going to help build your business as well as ours. Okay, Cody, back to you.
Excellent. So Greg, I just have some questions, and I've received some of these questions just throughout the creation of Anchor, and it's always good to revisit. So one of the questions that I have for you, how do we determine the timeline for contingencies? And what does that look like for each different loan product? For example, FHA, how long is the appraisal? How long is financing? And where are we at with current market standards on contingencies?
Cody, that is one of the best questions that right now can be answered, especially or be asked because of the market that we are now in. So let's start with the easy one. I hope the easy one. That's the financing contingency. The financing contingency, depending on two things. Number one, how much do you trust the lender your buyer is using? And number two, how complicated is the loan that they are doing? And the reason I say that is this. In many cases, at least Cody and I have worked together for quite some time now, when generally speaking, he gets people over to me as early as he can in the process before they ever start looking at homes. So we have the opportunity to do what's called a true pre-approval. If your lender that you trust truly goes out and does a true pre-approval, then the financing contingency is not a big deal because the loan's going to go through if the lender has done the correct work on the pre-approval. Now, and by the way, in our business, they oftentimes use pre-approval and pre-qualification synonymously, and they are not. Pre-qualification, in my opinion, means that the lender has looked at the credit report and an application, but no supporting documents. When I issue a pre-approval, that means I've looked at all the supporting documents, compared them to the application to say, we know you're going to get a loan. Now, you got to make sure that whoever the buyer is using for their lender is saying that. Now, financing contingency, if I issue a pre-approval and you call me and say, Greg, what do you want for the financing contingency? The market normal is 20, somewhere around 20, 21 days. But if you have to be competitive because your buyer is walking into a multiple offer situation, you might want to do what one of my real estate agents did Monday of this week, and they put in 8 days. And I even got a phone call from the listing agent saying, Greg, I just got to make sure this. They're saying 8 days. And I said, as far as I'm concerned, it could be 1 day. They are absolutely unconditionally going to get this loan. So you can put yourself in a situation to help your buyer out by using that contingency on the financing, not the appraisal. On the financing side, you can shorten it if you're confident that your lender is accurate. Now, again, the loan's not clear to close. You got to go through that whole process. And you got to pray nothing changes, which seldom ever happens, but it could. So that's the financing contingency. Now, appraisal contingency, totally different. Let's talk about conventional lending. Conventional loans right now, when you order an appraisal, from the date that you order it to the date that you get it back in hand, is typically 14 to 16 calendar days. Now, every once in a while, we'll get one back in 9 or 10 days. That's used to be very common, not anymore. Now, it's generally 14 to 16 days. Now, let's take note of this. Most lenders, me included, we do not order the appraisal until you get through inspection and you tell us that everything's good on the inspection, we've negotiated, we're ready to go. Now, why does the lender do that? Because we don't want to spend the buyer's money for an appraisal if they're not going to go forward with the loan. So we hold off. So let's say that you've got a 10-day contingent, 10-day due diligence. Well, if you've got a 10-day due diligence and it takes all 10 days for the inspection and the negotiation, now your lender orders the appraisal and it takes 14 to 16 days. That means that that contingency needs to be 24 to 26 days. I hope that makes sense to everybody. Now, if your contingency is 20 days or 21 or 22 days, the only way you ensure that that appraisal is going to be in hand is if you order a rush. If you order a rush, it's possible you then can get it in 7 days or 5 days, whatever the case is. But the buyer has to pay for that, oftentimes upfront, and it ranges between $150 to $200. So, for example, yesterday I had one, and it took 11 of the 12 days to work through the due diligence period. They had a 22-day appraisal contingency on the contract. So as soon as I got the okay, the very next thing I did is speak with both the agent and the borrower and said, look, we've got to do one or two things. Either we have to extend the appraisal contingency or commit to a rush fee. And, that's not a conversation I enjoy having, but I don't want to get down to day 22 and then have to call and say, hey, we're not going to make the appraisal contingency. So that's unconventional lending. I would just tell you, put in 24 to 25 to 26 days because you want to buy yourself some time on that due diligence period. Now, FHA, there is no time frame because the FHA on section 11 on your FHA exhibit on page 2, it says the home must appraise for the value, whether it takes 10 days, 14 days, 23 days, all the way to the day before closing. It doesn't make a difference. It has to meet the price. USDA does have a time frame on it. Again, same issue that you've got. VA is different. VA does not have a time frame. And this is what most people don't know. Inside of the VA set of regulations, if we order a VA appraisal, from the day that appraisal is assigned by the VA, because what the lender does on VA, lender simply goes to the VA portal and puts in a request for an appraisal. That day or the next, an appraiser is assigned. Now, this is where VA is so strong, especially today. The appraiser, by VA regulations, must produce that appraisal in 10 days. 10 calendar days, we have to have the 10 business days, excuse me. They have to have the appraisal to us. So there's a must. So VA is real strong that way. Cody, does that answer on the contingencies, or does anybody have any questions?
No, I think that's accurate. So, 21 and aggressive, in most cases, what I really heard was that it really depends on your due diligence days. If you're in a multiple offer situation, and that's one of the questions I'm going to ask here at the end. But if you're in a multiple offer situation and you're looking at a 5 or 7 day due diligence, you could potentially still hit the 21 days because you're not eating up a lot of your days waiting for the inspection to happen. And so would you say a safe number is somewhere between 24 and 25 just in general?
Yes, I would. And Cody, allow me to share something that I've had an agent, very experienced agent, start doing. This is kind of slick. A little bit more expensive to the buyer, but it works. If you know you're going to be in a multiple offer situation, she is now putting 0 appraisal contingency, no days. And you're saying, why would they do that? She makes sure she's doing at least an 11 to 12 day due diligence. As soon as that contract goes binding, the buyer has agreed that what they're going to do is they're going to pay for a rush fee on the appraisal. we are going to get the appraisal in hand before due diligence ends. So if it's low, they can back out.
Okay. Wow.
And now they have to pay the fee, which is, like I said, it's $150 to $200. So on top of the appraisal cost, but in a multiple offer situation, if you're pretty confident that appraisal is going to work, and you're pretty confident that the inspection might be okay, that just becomes an option.
Okay. That's great info. I have not went that route. That would be very confident. But you know, if you're in a multiple offer situation, and that may win you versus going up another $5,000-$10,000 to secure the offer because you're saying no appraisal. So
Yep.
yeah, I mean, $1,200 potential gamble risk, but you know, if the house doesn't appraise, then you could still terminate during due diligence. That's interesting. I'm going to have to, yeah, I might have to do that. All right, Greg. So tell me, I've had VA loans, I've had FHA loans, and on FHA specifically, there is a request for repairs by FHA. And I know I've ran into this with VA a few times where they've required repairs. Can you tell us which loans could have the least restrictive in the sense of, you know, if something is not functioning, it won't qualify for a loan? Or is there something that you could tell us or share with us when we're walking in with clients and we know that they're qualified for FHA? What are some of the things that we should be looking out for while we're previewing the home with them?
Cody, that's a great question. First thing, on any appraisal, whether it's FHA, VA, USDA, or conventional, every appraiser is going to be looking for safety and health hazards. Anything that's a safety or health hazard, will be conditioned on the appraisal. Now, FHA and VA and USDA do get a little bit of a tough mark on them because they have a set of things that they have to look for. I think that's what you're asking, Cody. And some of those things are, for example, if there's wood to ground contact any place outdoors, if the home is a siding home and the wood is touching the dirt, that is something that they're going to look for and they're going to have to remove. Sometimes you'll see deck posts that are not properly set up, and the wood is coming right up to the deck post. That'll have to be taken care of. FHA, VA, and USDA look to see the status of screens on the windows. I prefer seeing no screens on windows because then I don't have to, we don't have to worry about it. But that could be one of the things that that government loans will look for that conventional would not. They're going to be looking for things on the deck and on the porches to make sure that the railings are in fact in place and sturdy. Now, on conventional, that can also come up and say, hey, this is not sturdy. I just closed a conventional loan earlier this month where there were 5 conditions on a conventional loan that had to be met, 3 of which related specifically to the deck. So conventional can have the same thing. FHA is absolute, or I shouldn't say FHA, government loans will definitely be there. They're going to look for, they're going to be very conscious of whether or not there are water spots. Is all the plumbing functioning? Is there anything that makes it look like there could be an issue with this house? Now, again, I've just listed several of them. Heating and air conditioning, that's always looked at on every loan, whether it's conventional or government anyway. But the biggest thing, and this is why I think the stigma on government loans is not fair, they're going to look for things, but not necessarily that much more severe than conventional. But that list of things are, you can just, health and safety concerns. Those are the things.
Okay. And then, so holes in drywall are another example that I know of that I look for. Busted windows have been issues before, like a cracked window or, rock came in when you're mowing the grass. So yeah, so you just be mindful of that. And that's one of those things where when you're taking your buyers out, they're looking at, the oohs and the ahs of the house. I love this kitchen, but you have to train yourself to not engage on that. And you're being that expert and their eyes that they're not seeing. So, hey, did you guys notice that stain spot in the ceiling? And they're like, no, I was just looking at the master bathroom. So we're the extra set of eyes for them on their behalf. So great information. Okay, another common question, Greg. The credit scores. We have a lot of people that are currently, I had one the other day. Hey, Cody, I need a rental. I'm like, I don't handle rentals. One, we just really don't see the inventory make it to MLS. And two, there's not a lot of money to be earned from helping somebody and investing potentially a lot of time in a rental. So is there a set of numbers that we can kind of store in our minds that says, all right, let me ask a generic question. What's your credit score? And so what are the different credit score requirements for each of the loans?
Cody, another great question. Let me start by saying that the credit scores that you and I look at on Credit Karma or through our credit cards are not necessarily the credit scores that we are going to see as a lender. And you might ask, well, why is that? How can it be different? The credit bureaus have 9 different algorithms that are used to determine credit scores. This is important. The mortgage industry, the entire industry, not our bank, the entire industry uses the most conservative of those 9 to determine credit scores. Therefore, what I might see on my Credit Karma may not be the same as my lender is going to see when they pull my credit. Most of the time, a little bit lower, every once in a while, a little bit higher. But nonetheless, it's going to be very much is going to be different. The beauty of things like Credit Karma and your credit cards, our credit card credit scoring, is that it gives you an idea of what to expect. If somebody tells me that they've got Credit Karma and they've got a 595 credit score, I'm fairly confident that they're going to be in the 500s. Somebody tells me they've got 800 credit scores, in all likelihood, if Credit Karma says 800, they're going to be, if not in the 800s, they're going to be above 760. So that's the first thing I want to mention on credit scores. Next on credit scores, and this part I think is very important to us, because Cody, you asked, what's the guideline? Well, generally speaking, if I see a borrower with credit scores above 720, I am more than likely going to be recommending a conventional loan. Now, it's not that they can't do FHA, not that they can't do USDA, but I'm going to be looking at a conventional loan. And you might ask why, and it's because of upfront private mortgage insurance. The private mortgage insurance for FHA, you've got upfront and you have monthly. So if a person's got a high enough credit score, I don't want them to pay that upfront. So 720 and above, I'll generally pretty much know I'm going to be putting them into a conventional loan. Between 700 and 720, you can put them into any loan, but that's where we'll do some comparative work. Maybe conventional, maybe FHA. And Greg, why would you do that? Well, even though there's going to be some upfront MI, oftentimes government rates, government pricing is less on our interest rate than conventional. Therefore, if I can get somebody a 2.5 government, FHA rate versus a 2.875 or 3% conventional rate, well, obviously that's going to be better. Now, if you go below 700, PMI comes into play. And so FHA, it's called MIP, Mortgage Insurance Premium. It's FHA's version of PMI, basically the same thing. But the thing is, on an FHA loan, if I'm above it, no matter what my credit score is, my multiplying factor is going to be identical regardless. Whereas in conventional, the higher the credit score, the lower the PMI multiplying factor. So my payment will be less. So therefore, I'm going to direct people that are below 700 oftentimes into an FHA loan, because The MIP is going to be the same as the PMI, maybe even less. Interest rate will be less, so I can save the borrower a much better deal. Example, I've got a loan that's closing next week, and they originally thought they wanted to do a conventional loan from speaking with another lender. When they spoke to me, I said, why are you doing, the middle score was 685. And I said, why are you doing conventional? Just curious. And they said, well, we thought that was a better loan. And I said, well, let's just do a comparison. The payment between their conventional loan and their FHA loan, the difference in payment, and this was like a if I'm not mistaken, $270,000 loan. The difference was almost $100 a month in the payment by going FHA versus conventional. All because the rate, the score was 685. They got beat up on conventional, and the FHA loves that credit score. VA is best loan on the market. If you get VA buyers, best loan on the market. Interest rates are phenomenal. There is no private mortgage insurance. There is a funding fee, but there's no private mortgage insurance. USDA, second best loan on the market if a person qualifies and if the home's in the USDA area. Very low funding fee and very low. USDA does not call it mortgage insurance, but we do because it's the same thing. Very, very low factor. So if I can get somebody into a USDA loan, we do everything we can to make that happen, with one exception. You got to give 45 days for a USDA loan to close, because after the lender finishes the loan, it then has to go to USDA for their commitment. And USDA right now is taking 15 days, and there is no expediting. Cody, back to you.
Yes, Stephanie's got a USDA loan right now. Which initially supposed to close middle of January, then it got bumped to the end of January, and now it's January 5th with the buyer using their unilateral extension. So, okay, so let me go back to that. So credit score minimums, maybe that's one way I should say it. What does a conventional, is there a minimum, so to speak? If someone says, hey, I've got a 620 credit score, we just learned that their credit may not really be 620, it may be 600. What's the lowest credit scores that you will do for each program?
Cody, good question. And that varies from lender to lender a little bit, but a guideline. Most lenders, not all lenders, most lenders, you're doing conventional, you can't go below 640. I know that's the case in our company. Below 640 cannot do conventional. USDA will let you go below 640, but the lender has got to approve it. And in our case, if it goes below 640, we have to do a manual underwrite. That's not a pleasant thing. So I usually cut off 640 for USDA and for conventional. FHA. In our company, we can go down to 600 on FHA and VA. Now, I will tell you, if you got scores below 620, it's not pretty. If I have a borrower, as I did last week, with a 605 credit score, and I looked at the loan and I said, you know what, I'm not going to be able to do this. And they said, but lenders, all lenders are doing below, they'll go down to 600 and some down to 585. And that's true. But watch out. That's one of those where you need a long financing contingency, because it's not going to be an easy loan. So generally speaking, 600 or 585, depending on the lender, is the cutoff for VA and FHA. In most cases, 640 for conventional and USDA.
Perfect. Okay. And just for reference, the USDA, you can always verify if a property is located in that area by going to the USDA website. And then I can do a whole nother video on that. I don't want to take up Greg's time with that. All right. Common question. Greg, how much closing costs can we ask the seller to concede? And how do we get that number?
Well, that's where I've got the little cheat sheet, Cody. And I will send this to, let me see if I can hold this up here so all of you can see it. If you want a copy of this, I'll just just send me a note and I'll forward it to you. When you call me and ask and say, Greg, what are my closing costs going to be? The first thing I'm going to do is say, well, how about if we talk about closing expenses? Because closing expenses include three things: closing costs, prepaids, and escrows. So we're not going to go through the sheet in detail, but closing expenses, that's what you're concerned with. Now, this sheet breaks it down, makes it easy. If you call me and ask, Greg, I got a $200,000 deal doing 5% down, how much? I just grab the sheet and I start working through the sheet. So I can show you how to use that privately another time. Now, Cody's asked the question, how much can the seller pay? That's right down here on the sheet. So if you've got this with you, you don't have to be a lender. You don't have to know. This is applicable to every lender right here. So I will send this to you if you need it, but let me just quickly run through it. On FHA, it's very simple, 6% of the sales price. Now, I've never seen one at 6% ever, because the closing expenses don't go that high. But they could, I guess, maybe, but 6%. VA is 4% of the sales price. USDA is 6% of the sales price. That's what the seller may contribute. On conventional, it varies based on the down payment. If I'm putting less than 10% down, the seller's contribution can be 3% of the sales price. If I'm putting 10%, if I'm putting 10% down or 15% down or 20% down, it can be 6% of the sales price. If I go to 75% loan to value, 25% down, it can go to 12%. I've never seen that in 31 years, but it can. You don't have to remember all that. Just send me a note. I'll send you the sheet and it's all on there.
Perfect. And that would be, especially for those that are working with home buyers, that would be something incredible to put in your, maybe create a home buying packet, and you could carry with you when you're out looking at houses and when you're discussing an offer. Hey, what should I offer? And, another thing to consider as well is we have to educate the buyer and let them know that, well, this house has been on the market, it's 200,000. I'm going to get them for 180. You have to be able to know, all right, well, if we can write this for 186 and get the seller, and make sure it fits within your numbers, get the seller to contribute $6,000, that means $6,000 is not coming out of their bank account. So there's some offer strategies that we could use as well. And we can talk about that another day. Okay, so great question. Okay, so we already have a breakdown of the closing sheet of the closing costs, and I have used that, and it's been very helpful, especially in offer situations. How do you, and we touched on it a little bit, and I want to give everyone else an opportunity to ask questions. How, besides doing the zero appraisal contingency, how can we create strong multiple offer to submit to these listing agents that are dealing with this day in and day out?
Pretty great question. From a real estate side, I'm sure that you've already done things like have your buyer do videos, have them write letters and all of that. But let me tell you something the lender can do. Now, I've never seen this other than something that I've done, but any lender can do it. I have got a document that you can use if I'm your lender. When I send a pre-approval, I'll send you what I call the lender's questionnaire. It's a series of 7 questions that you can put with your pre-approval that tells a listing agent, subsequently the seller, the strength of your borrower. And it's very simple. It does not disclose confidential information, but it does answer very important things like, did I review all of the income documentation? Yes or no? When I looked at the buyer's credit, is there anything on the credit that could prevent us from closing on time? How much time am I going to need for the appraisal, and when am I going to order it? It takes all of those questions, and most of them are yes and no, but it lets them know. And at the last series of questions relate specifically to the lender. When you're a listing agent and you don't recognize who the lender is, how does it make you feel? Now, this document puts in there who's going to be your lending contact, what's the best way to reach them, how long does it take for them to respond. So I put all of that information right on the document so you can make it part of your pre-approval to bring strength to your borrower situation versus any of the other offers that are being presented.
Thank you, Greg. That was awesome. All right, your turn. What questions do you have that we may have missed or may not have covered? Don't forget to unmute yourselves too, please.
Hey, sorry. I would love to know a little bit more about the closing costs the sellers can offer, and like an example of how that would be a helpful situation to get the seller to pay more. I've always found the sellers that I've dealt with to be very angry about covering closing costs and not wanting to offer up anything extra. So I'd love a scenario of where it would be helpful for them to offer more in the closing costs.
All right, great question. So let's face it, it's a competitive market right now, and sellers are not real excited about having to give up any proceeds that they would like to put into their pocket. But at the same time, your buyer may not have what's needed in order to meet down payment plus closing expenses. Therefore, one of the strategies is to raise the sales price so that you can cover what you're asking for and the seller can still net whatever they're trying to net. Now that creates a problem, and that's with the appraisal. The appraisal must meet the contract sales price or all of this is for naught. So the strategy is, first of all, how much will this house probably appraise for? And that's where you're the expert, not me. So if you think it'll appraise for 275, and your buyer saying, I really, really want this house, and they're asking 273 or 272, maybe you go to 275 and ask them to pay 5,000 or 6,000 in costs, and hopefully what they're seeing is that you're going a little bit above their listing price, but not a lot. So you're basically taking on some of the burden of those costs by letting them net a little bit more, and then they're going to come out of pocket a little bit. So the big thing there is, will the home appraise? Now, Cody and I have dealt with numerous people in the past 6 months who think that they're negotiating experts, and they go look at property that's on the market for $510,000, and they put an offer in for $460,000 and the seller paying $10,000. And Cody will call me and say, Greg, I just need some encouragement because these people are crazy. He can say it to me, but he can't say it to them. Well, let's face it. In today's market, if the home is priced close to where it should be, 510 in this example, you're not going to be able to come in with even a $500,000 offer asking them to pay $10,000. But I might be able to get them 510 and ask them to pay $5,000, $10,000, $8,000, $6,000 in costs. At least it's reasonable. Does that answer the question or make any sense?
Yep, absolutely. Thank you.
Cody, I have one other thing to add before we wrap up. And this is important. Cody knows this, and Cody does this, and and Tim does this because I work with Tim on a regular basis as well. But one of the things I'd encourage you is that anytime you have a lending question, please reach out. Whether it's phone call, text, or email. You know, I don't care if I'm working with your buyer or not. That's not important. It might be your listing. Cody and Tim have oftentimes reached out to me and says, Greg, this is, it's my listing and they're coming in with this. What do I, well, how would you, from a lending side, what should I be looking for? And I want to encourage you to do that. If you have a buyer who's working with a lender who's not responding to you, you don't have to try to push them over to me. That's not the issue. Just get in touch with me. So I'd say, Greg, this is what's happening. I don't understand it. And I'll be glad to answer questions as much as I possibly can. Obviously, if I'm not doing the loan, it's hard to know all the particulars, but based on enough information, I probably have a pretty good idea of what's going on.
Yes, and just to confirm, so Greg, when you were with your previous company, was that the tout of the 12th largest VA lender? I mean, where does this company sit with your new company sit with VA?
Oh, this company does a lot of VA, not as big as the Federal Savings Bank. Federal Savings Bank was one of the 10 largest VA lenders in the country. This bank is nowhere near as big as the Federal Savings Bank. To give you an example, Federal Savings Bank, when I joined them 6 years ago, they were about the size of the company I'm at now, about $3.5 billion in production. Now, the Federal Savings Bank in 6 years has grown to just shy of $14 billion in production. They've had a pretty good 6 years. So this bank's at $3.5 billion. Honestly, I kind of hope they don't get to $14 billion that quickly, because things change when you're in this business and you start getting big. But anyway, but we're a very strong VA lender. Myself, Melinda, and the team are all VA certified. So we have our first VA loan, by the way, closing next month with the new bank. My first one with the bank.
Excellent. And I just mentioned that, Greg, because we've converted a lot of veterans. The USAA, Navy Federal, the other major banks that advertise on TV, Veterans United is another one. They feel like, oh, well, it has veterans in their name. But what you find is it's no different than like a Quicken, where it's an online platform. You're probably going to speak with no less than 2 or 3 people throughout your entire transaction. And especially if you're dealing with a first-time home buyer that has no experience and has lots of questions that you really shouldn't answer or, feel comfortable answering, you can point them towards Greg. And I've done that many a times. And, it may not happen right away, but it's something that you can lean on Greg with, because he does have all of the experience with the VA loans. So, Greg, do you have anything else that you want to share with us?
No, I think that's it. Just to say thank you, and I hope I get the opportunity to answer questions for you and potentially serve you.
Okay. Susan, you unmuted. Do you have a question?
Yep. I know that Greg is on our vendor preferred vendor list, but he's on there as with First Federal Savings Bank. You're no longer with that company, Greg?
No, that's correct. Federal Savings Bank is gone. I'm now with First Community Mortgage. So Cody, if that's something that you need a new logo from me, I can get it to you fairly quickly.
Yes, that would be good. Yes, I need to update the vendors list. Thank you for that.
Okay.
I have a
Thank
quick
you, Susan.
I have a quick question about that too. Will the list reports be updated with new stuff for Greg, or is list reports with Federal Savings and it's not a thing now?
Great
Say
question.
that again. I didn't catch all of that.
I'll
Sure.
get it. I'll get it.
Okay.
So what she was asking, Greg, was list reports was with the Federal Savings Bank. Is that something that rolled over to you?
Yes, it did. And as a matter of fact, that is one of the things that List Reports reached out to me and said, Greg, we need you to change your profile. So I will be doing that before the end of the month.
Okay. Good question, Stephanie. I didn't even think about that. I know List Reports made a report for me the other day on my listing. I didn't even think to check that. So thank you for catching that.
It's one of those things. It's still there, but my phone number hasn't changed, so they're going to get it. I see Cindy just joined us. Cindy, thanks for your help with that buyer.
You bet. Thank you, Greg.
All right, any other questions? Or we can let Greg hop off and then Cindy can teach us a little bit about home warranties.
How do I get my contact information over to you to get that chart?
I'm sorry.
How do you want to collect the information? Do you want them to just email you, Greg?
Yes, best bet is to just email me and then I'll send you all the contact information. By the way, 2 of the videos that Cody has used in the past, one was for what expenses will a buyer have at closing, and the other one was the difference between FHA and VA. Those are designed for buyers. I'll have those rebranded and be ready to go again next month. They're working on it right now. The videos had to be retouched up because they showed Federal Savings Bank. They now have to be with First Community Mortgage. So that's being done right now. And then as soon as those videos are ready, I'll get them out to you because you can use them. They are outstanding tools, especially for first-time home buyers.
I'll need that. So Greg, I need your new contact information because I do not have your email address.
You don't have it. Well, it's fairly simple. It's Greg, G-R-E-G, dot, Janicki, now that I'll have to spell, J-A-N like Nancy, I-C-K-I, at, and unfortunately it's long, but it's easy, FCM, First Community Mortgage, just the initials, F like First, C, Community, M Mortgage, homeloans.com.
And Greg is also part of our Anchor All-Stars group, so I'm sure he could share his contact information in there. And then Greg, if you want to send me over, just email me the link. Then I can share that in our All-Stars, or you could upload it, and that way we can grab it and it's archived in our group as well. So
I'll get it to you this morning.
okay, perfect.
Hey,
Yeah.
just one thing for everybody. I hope all of you have used Cindy in the past. Cindy, help. I don't normally do home warranty stuff, but I've had situations in the month of December and one last night, and Cindy's got it all taken care of for our buyer. So she does, and she does a great job, and her company they're fabulous. So thanks, Cindy. Cody, I'm signing off. Take care.
Thank you, Greg. Bless you, brother.
Bye.
Bye.
Excellent. Well, welcome, Cindy.
Thank
Oh.
you. Thank you. Thank you.
Yeah, we're so excited. And Cindy, my HVAC guy called me today. He said, "Hey, we're installing your new system. So thank you to Achosa for, contributing the $2,400 towards my new system that just kaputted,
I love it. Same thing happened to me, Cody, when I moved into my house. It's been 1 year now. My seller was not providing me a home warranty. So luckily I bought it myself. Not 3 months later, my air went out. So it was $3,100 to install that system, and my home warranty paid $2,400. I'm like, I'm happy to pay $700 for a new system.
Yes,
Yeah.
yes, absolutely. Well, we have a lot of new faces, Cindy. So we're going to let you introduce
Okay.
and just teach us what Achosa, how are they different from other home warranty companies, and then answer any questions that these guys may have.
Perfect. So is there any newly licensed agents on the team?
Yes, I will speak for them because most of them are muted.
Okay.
Yeah, we have, so this is being recorded as well. So this will be on YouTube, and we'll also have it on our Facebook. So we do have quite a few new agents. Yes.
Okay, perfect. So the reason I asked that is because I want to be able to do like Home Warranty 101, a really quick overview, and then the differences between us and the traditional for those that know what home warranty is all about. So home warranty, first of all, is such a great way for you to get that buyer peace of mind. Okay, that first year, they don't know what's going on in their home. So home warranty covers the systems and appliances in the home. So don't confuse it with homeowner insurance. You need both, but for the sake of this call and this conversation, it's home warranty. So the systems and appliances, think about, we're in the Peach State. What does it cover? Peach, plumbing, electric, appliances, cooling and heating. So those are your primary home warranty covered, eligible covered items. Okay. So, and I know this market is tough right now. I hear that from so many agents that, oh, we just have to have a clean, a clean offer. But, a lot of my agents are getting the home warranty in after the inspection, during the due diligence, amendment to address concerns. So if you have the ability to put that in at that time, do that. It's, anywhere from $600, $700, $500 to $700, let's say, depending on which plan you choose. Usually the seller's okay at that point. I don't know, Cody, what do you think? What are you seeing out there? Are you able to get it in at that point?
It just depends. Multiple offer situations, I'm not necessarily asking. I want it as clean as possible. So what I tell my buyers is that, we're going to get an inspection and we can negotiate it in at that point. And that's typically, the sellers are maybe a little bit more comfortable after seeing the report. And so you get some of the items addressed and then get the rest of the items covered by the home warranty.
Good. Okay, that's great. Because what happens is you think that, okay, the inspection is pretty clean. Do we need a home warranty? If you have the ability to put it in, do, because more than 50% of our calls come in the first 30 days, even with a clean inspection report. So keep that in mind. You don't know when the refrigerator is going to go out, when that ice maker quits working, when the HVAC, you've got a plumbing leak, the toilet's leaking, all those things that you just don't expect. So that buyer has just used their life savings for the down payment. And if they can get some help on those items as they're getting used to their new home, it's just a big bonus and a big feather in your pocket as well, or your hat, I guess. So try to get that in, especially with all that we're getting back as far as feedback. Cody just gave an example of his experience, my experience. Homeowners usually don't fill out those surveys. Guys, I came from the traditional home warranty world, and we're going to get into the difference between traditional and non-traditional here shortly. But usually homeowners don't give great feedback on home warranty because they didn't have a good experience, because the contractor didn't show up. When he showed up, he misdiagnosed, or he never came back, or he ordered the wrong part. And it's usually a very long process, and it's not a very good process many times for them. So our feedback is just phenomenal with homeowners and with agents. So when you can get behind it with confidence, it really is a great, like I said, feather in your cap for you. Guys out there, this is a really big, I was with a traditional home warranty company for 5 years, and I'm not dissing them at all. It's home warranty is really great to save homeowners money in that first year. But the process is very different. And sometimes getting those savings comes with the price. And that price is usually, like I just mentioned, those contractors, that's really where most of the problems came from. So with a CHOSA, the homeowner uses who they want for repair. That, guys, is huge. That's made all the difference in the world. So you already have a relationship with the HVAC guy. In my case, I've been using Comfort Zone forever. Every home I've had, they come in, they do the maintenance twice a year. When my air goes out, I want to be able to call them because they are reliable. They know me. I've got a contract that they're going to be out within 24 to 48 hours. So that is huge, especially in July when your air goes out. So yeah, we can use, the homeowner uses who they want for repairs. We pay those guys their full retail rates. That's number 2. And traditional home warranty does not do that, guys. They negotiate those rates down to even as much as 50%. And think about it. If your clients thought you were only worth 50%, how, where would you be prioritized, right? So that's why when the air goes out in the summertime and they see they've got 10 calls and 2 of those are home warranty, they're not up there on the top of the list because they know they're being paid less. Traditional home warranty negotiates the rates down. That's why they can't get those guys that have the good reputations and are well established. They won't work with home warranty. So now 18%, that's what homeowners using traditional home warranty have access to 18% of service providers. That's not a lot. So with Achosa, they have access to 100% because they use who they want. Go ahead, Cody.
Well, that was one of the things that I ran into, my HVAC guy actually replaced my unit on my first house, and I didn't have home warranty, so I paid out of pocket. But that was the first thing that I told him. I said, "Hey, I've got a home warranty on this," and you should have saw him. He's like, "Ugh," just the disgust and the disdain for home warranty companies, because he's had to deal with them in the past. And when I reached out, and this is not a plug, I'm just telling you about my experience. But when I reached out to Achosa, they literally, it was a 10-minute phone call. They collected my information. They said, all right, all you have to do now is meet the contractor of your choice. Once he's out there, diagnoses it, put it on speakerphone. And we both spoke. The Achosa rep asked the questions to the HVAC technician, and then it took 10 minutes to get approval. And he said over the phone, this is how we're going to do it. We're going to pay you this way. We're paying this much, and you schedule it. You call us back. If you're satisfied with the work, we're going to pay your contractor. And my contractor was like, oh my gosh, this is the easiest thing ever. So just to give you guys a little bit of the background, because we sell these, I've never had a home warranty company prior to this. I didn't know what the process and what it looks like. And maybe that's something you can elaborate with, how Achosa is different from the other company that you're with. What would the steps look like, and how are they different besides just picking your own contractor?
Yes, thank you. With a traditional home warranty company, the average number of calls is 13. How many calls did you have, Cody? Because time is money, guys. I mean, it really is. So when you're used to, I have to do 13 calls is because they didn't show up, or where is he? I took off work. Da, da, da. Okay, so you had how many calls total?
I had to unmute. I had 2 calls.
Right. It's usually with us a three call process. You call them. Oh, I have a problem. Then you call them back when your contractor is there or has diagnosed, and then the next one is paying. That's pretty big. So that's one huge difference between those 13 calls. So the process with a traditional home warranty, there's so many approvals that have to take place, which equal the delays for the homeowner as they sit there without whatever working item they have called for. So they have to go through a huge approval process. With us, we don't have an approval process. It's one time. Yep. Okay. Sounds like that's eligible for coverage. Let's go. The others is, oh, how much is it going to cost? Because now we have a warehouse. They don't source anything locally, right? They have to go to this warehouse that's who knows where, a traditional company. How much is it going to be? Because they always pay discounted rates. And then that whole process has to be worked through. It's days. So yeah, it's days, and it's about 13 calls average. That's the real big difference. And then the traditional home warranty company never pays the contractor when they're in the home. That's another reason why the service providers don't really want to work with a home warranty. They have to chase their money. Usually it's 30 to 60 days. So all of those things really add up to a really good experience. And that's what we were launched to provide the customer with, a better customer claims experience. And we've succeeded. So it's huge. We do have, Cody, you and I haven't talked about this yet, but this is one of the reasons why I wanted to come into your call and have a little bit of time with you. The 2021 contracts are coming out. I think most of the home warranty companies have rolled those out by now. Ours doesn't roll out until March here, but there will be some changes. So I don't know if you want to take this call to talk about those, or we want to wait until the end of March.
We are recording, so if that's something that you don't want on the recording, then we could do that maybe off. If I stop the recording, then I guess we start it. But yeah, that might be something we revisit.
Good. Let's do that then. Right now, then, for the sake of this discussion and the 2020 contracts, because those are going to be effective, and it doesn't matter when the closing date is, it matters when that home warranty is ordered. So from now through March 31st, continue to use the contracts you have now. And that is a 500 and a 625 plan. That's what we have. Okay. The 2021s are going to have 3 plans. They're going to be a little bit different. Seller's coverage is going to include HVAC. There's a lot of little changes. So I'm going to pop back in hopefully onto one of your meetings toward the end of March, and then we'll cover all of those. Okay. But yeah, so I'd like to answer some questions that I know you guys have to have about home warranty, and there's not a silly question.
I have a question.
Sure.
Okay, so our family has always bought a home warranty every time we purchased a house. And I know my mom has bought them in the past, and I've had to call about her heating or her plumbing or whatever, and then my brother as well. And traditionally, and I want to know how a COSA is different. Traditionally, like we call about, let's say the toilet's leaking, and that's like your first contact. And then they eventually get somebody out and they try to fix it. And let's say it's still leaking. I was always under the impression with traditional companies that after 2 or 3 attempts and it's not resolved, the issue's not resolved, that they would pretty much pay for it to be resolved completely, and you just pay like a fee, like a flat fee of 50 or 100 or whatever. That's kind of what I've always kind of remembered about traditional companies. Is that similar to a COSA, or how is a COSA different?
So, and I know this is such a tough name, guys. It's like, what is this name that you have named yourself? A COSA, a CHOSA, whatever. You know,
Yeah,
that's
it's a
always,
little unique.
I love your cat in the background, by the way, sitting on the bed, taking a little bath. But so I always think, okay, how can I, when I first start, I'm like, oh my gosh, this name is driving me insane. So like we all love Europeans. So I say a CHOSA you, you CHOSA me, a CHOSA. So just so you know, and it's pronounced a COSA, a CHOSA, but it is a CHOSA. So here's how we differ, Cindy. So with what you've just described, that is a traditional home, because they have to keep coming back out, because probably most likely whoever's coming out is misdiagnosing, or there's an issue. When you're using the person, if you're on the Nextdoor app, had a great experience, or you know somebody that is in the they're usually diagnosing it and fixing it the first time. So that usually is going to go away. But I don't know that after 2 or 3 or 4 times that there's only this call fee. What I have experienced with traditional, because this happens frequently, what you just described, if that service provider has to come back out a second time because it wasn't repaired, they do not pay the call fee that second time. Okay. When you have a relationship with your comfort zone or your plumber, most likely it's the same thing for you, because something happened that they didn't fix it the first time. So I think that really probably is similar. But they most likely won't have to come out a second or third or fourth time, right?
Yeah, yeah, especially somebody you know and you have confidence in.
Right,
Yeah.
right. So I think that is going to eliminate itself just naturally by having this model.
Okay.
Yes, Cody.
And again, I'll talk from my personal experience. So they obviously really want to repair the equipment that's malfunctioning primarily, right? And that's what they asked the HVAC technician. What are the issues that are going on with the system? And he named 4 of just, you know, the plethora of issues that the system was just old, but there was failing. The R22 refrigerant was leaking or wasn't holding. And so any home warranty company, any company insurance, they're going to attempt to fix it, repair it before they replace it. So, but at the end of the day, you know, my HVAC technician has worked with me. He knows that it wasn't functioning, and he was able to tell the home warranty company, and Achosa said, okay, we're going to replace it. And this is so that any company is going to do that though.
And right. And you know, Cody, in that situation, here's what I do know that you probably don't realize is that those service technicians that work for a traditional home warranty company, they get more incentives to repair instead of replace. Just saying. Yeah. So because the home warranty really, they do want to put Band-Aid, Band-Aid, Band-Aid. With us, we don't have those relationships. We don't have that training, if you will. on the front side that says, here's what we need you to do when you're out at the, so if it needs to be replaced and it makes sense, because yes, we could put some Freon in, but in 3 months, we're going to be back out. We look at that as, that doesn't make sense. If this is at the end of the life, it's at the end of the life, and we need to move forward with replacement. Big differences. And look at your cat in the background too. I just love it. I love all these animals. Your cat, it was just laying in the sunshine.
I was gonna say my dog's. I don't know if you can see her. She's like right here. But anyway.
Oh no, I love animals. Oh my gosh, love them, love them. So yeah, that's very different. And I think that what you just described, Cindy, is typical for traditional home warranty, which also just adds to the frustration for the homeowner. I mean, you've got to come out 3 times, 4 times for the same issue. I've got to continue to take off work. Time is money. So it adds to the frustration, where this model eliminates that. Yeah, I think that that again, getting back to that 50, it's over 50% of the claims that are coming in come in that first 30 days. Just think about that, because the last thing you want to have happen is one of your buyers not have a home warranty. If you can get it, you can get it. If you can, when you can and when you can't. But it sounds like you're having the discussions. So have the discussions and just know that a lot of those come in the first 30 days.
Well, and the other thing too, if the seller is unwilling, the buyer can always purchase it. I purchased my own home warranty,
Yes.
or it's something that you could negotiate, and you could potentially split with them and say, this is, I was going to get you a small closing gift, but I'm willing to contribute, X amount, whatever you desire to take, and you can take that right out of your commission. And that's another way to build rapport and trust with your clients, and they're protected. And I did, just to verify, I did have an issue when I first moved in with the HVAC, and the technician was able to come over and fix it. I did start a claim, but never followed up with anything with the CHOSA. But they did ask for a copy of my inspection report. And as long as the inspection report is clean, meaning there was no previous issues, machine hadn't been tampered with, that they do want to ask for that within the first, was it 60 days?
It's 30, Cody.
30. Okay. Yeah.
Mm-hmm.
So just be mindful. Now, if the inspection report came up and said the HVAC is not functioning and it needs this, and it wasn't addressed by the seller, then that may be a something questionable by the home warranty company. But you will have to.
Yeah, it is going to be just to be clear on the difference between pre-existing conditions are not eligible for home warranty coverage. And how do we verify pre-existing is exactly by asking for a copy of the inspection report. So it's usually that first 30 days. And we just want to look at it and go, okay, it was visually mechanically tested. It was in working order. So many times you're going to see on an inspection report, this is old, it's at the end of its life. For us, we're okay with that. It's still eligible for coverage. It was in working order. There are home warranty companies out there that they reduce the amount of the cap or what they allow for that replacement based on the age. We do not. Age is not relevant as long as it was in working order. So that pre-existing conditions we want to eliminate. If we covered pre-existing conditions, oh my gosh, the home warranties would be $3,000, $5,000. So we cannot cover pre-existing conditions. We do, however, cover what's called unknown pre-existing. So let me explain what that is. So the inspector came in, he checked, let's just say it's a dishwasher. The homeowner moved in, the first time they used the dishwasher, it's leaking. Most likely, it was probably a pre-existing condition, right? If it's the first time they used it and it's leaking. So we're going to ask for a copy of the inspection report. If that inspection report says they went through a cycle and didn't indicate there's a problem, that's an unknown pre-existing. The homeowner and the agent did their due diligence. They had an inspection. It was not found. We're going to cover it. That's unknown pre-existing. He missed it, or it just started leaking between inspection and move-in. So that's the difference between unknown pre-existing and pre-existing conditions. Okay. Any other questions? Yes.
I take it that whether the buyer is buying it or the seller is offering it, that all the expense of the home warranty is taken at closing. Am I assuming correctly?
We can, if you have it as part of your contract written in special steps, seller to provide, not to exceed, to be ordered by the buyer, to be ordered by the selling agent is usually how it's in special steps. The closing is taking place and they are taking it from your proceeds. However, if seller is not providing, buyer wants to, buyer was splitting with agent, we can do that a number of ways. We can take that out of the closing and send those links to payment through your email. That doesn't matter to us. It's whatever you want. Whatever makes sense for you based on the contract or outside of the contract. We're good.
All right. Thank you.
Mhm.
And that's something, Susan, just again, I keep talking, but I've just had personal experience. My seller had a home warranty coverage that ended September 1 of 2020. And so, you know, one of the things that we did, and I think there's a time frame, Cindy, if I'm correct, where there's a price difference, and maybe you can elaborate after I finish, but I ran that home warranty company out to as long as I could with the window, and then I purchased my Chosa home warranty within that. So I was basically double coverage, and my coverage now starts at the end of August versus when I purchased in the middle of August.
So I'm not real clear, Cody, I want to be sure that I'm understanding the question and the coverage timelines, because we do have two different programs. One is a home warranty that has a realtor discount, basically, which is what you guys are all working, and I work with you. That means that first year is the 500 or 625. That is the homeowner taking advantage of using a realtor and getting a home warranty. If they've been in their home for 5 years, 10 years, and are not going through a real estate transaction, they can still get a home warranty. The cost is a little bit higher, and it's a monthly bill, and they do that online.
Okay. I thought when we had talked about it, there was something where I had expressed that we had a current home warranty.
Mhm.
And I thought you had to purchase it within a certain timeline of actual closing date.
Oh, I see. Thank you. Thank you. Yes. It is within 30 days of closing that we would still be able to do to set you up with the home warranty plan that we're talking about, and not the online monthly bill. It is 30 days.
Perfect.
Yes. And
Okay.
if I have to fudge that a little bit, I will. Just let me know, case by case. Okay.
All right. And then one last question, because they've been so patient. They've been on here for an hour and 20 minutes.
Ah.
What's the best way to order the home warranty?
It depends. Do you have a closing coordinator? Do you have a transaction coordinator?
We're about to launch one in-house in Anchor. Yes.
Okay. When you do that, you might want to filter everything through your transaction coordinator. Right now, you can call me. If it's easier for you to fill out a form, I have a form that's a fillable form you can do online and then shoot it off to me. You can call me. I think Tim has a coordinator that he uses. So I enter home warranties every single day, usually in a timeline of 3 to 5. But if you've got, how many times have I answered the phone and they're at the closing table? Oh my gosh, I forgot to order the home warranty. It's happened. So if I'm not in a meeting, I'm taking that call and I'm putting it in the system right there. And yeah, so call me. And please, if your buyers or sellers have any questions about home warranty, don't feel like you can't give them my phone number. Please do. I'm working on behalf of you. So whatever I can do to add value, that's what I'm here for.
Absolutely. Yeah. And I'm definitely one of those ones. I was like, especially in this market, where attorneys are maybe waiting until like the last 5 to 7 days to work on the, title work and work on the settlement statement. And they're like, hey, where's the home warranty? And I'm like, Cindy, I forgot. Forgot to order the home warranty. Don't shoot me.
This stays with me.
Yeah, exactly.
Cindy, I have a question for you. So do you have a specific service area that you stay within, or do you do all of it in Metro Atlanta and surrounding areas?
So with me, because of where you are licensed, Anchor, that zip code, it doesn't matter if you're selling a house down in Peachtree City or Dawsonville or Savannah, you're working with me.
Okay.
And keep in mind that those outlying areas, if you're representing a buyer in those areas, my gosh, Achosa is perfect, because with a traditional, those outlying areas, they struggle with getting service providers out there. Yeah, all of those areas are so great for Achosa, because that's the one guy, they're keeping that dollars in the community, those dollars in the community, and there's somebody right there locally that they can work with.
Perfect. Thank you.
Mhm. Anyone else?
Yes, I have a question. How much is, okay, so let's say somebody has, I don't know, an issue with their heating. How much is like a service fee typically
So
with Achosa?
this year, our 2020 contracts, the $500 plan, the essentials plan, the call fee is $100. The top end first choice plan, which is $625, the call fee is $70. We're going to have a little difference in the 2021s, but we don't need to talk about that right now and confuse you. Okay.
Okay. And you mentioned something about, so if somebody did not go through, let's say they have an existing home and they're in their home for 5 years, they decide they're suddenly going to buy a home warranty. Is it a different fee? It is a different fee. It's not the 500, 625 right now.
That's correct. And keep in mind the 500 and the 625, that check is usually coming from the closing attorney, one lump sum.
Okay.
Or if you're splitting it with your buyer, 2 lump sums. With what we call direct to consumer, they are getting billed monthly, and it does spread over 12 months. It's a difference of about $70 to $90 more to finance that over a 12-month period. And the fact that we don't have a recent inspection report to verify everything's in proper working order.
Yeah, that makes sense.
Yep.
Great question, Cindy.
Yeah, great question, Cindy. Any others?
Oh, I'm sorry. Okay. Do you guys cover septic?
We do. So we have some add-ons. You're going to see in our, Cody, does everyone have a copy of that snapshot or that pricing, or would you like me to send that out after the call?
You can do that. The other thing I was telling Greg, if you want to put it in the Anchor All-Stars, that way it never goes away. And if someone deletes an email or misplaces it, we can save it as a picture in there.
Okay, you got it. Yes, there are 6 or 7. Oh my gosh, the cat is so adorable. There are 6 or 7 add-ons, what we call optional coverage items, Cindy. So septic is one of them. What we cover under the Peach, plumbing, electric, appliance, cooling, and heating, is what is usually in all homes or most homes. The optional coverage, you're not going to find a pool in all homes, or the septic, or the well. So those are optional coverage items, and you would take that $5 or $625 and add on. In the case of septic, it's $80.
Okay, well, that's really good to know.
Yes. And I will upload that, or I'll add that to the Anchor All-Stars page. So you have the snapshot, which is really good for when you're writing contracts, because there's different pricing for condos, townhomes than a single family. There's a different price for new construction. Our new construction pricing starts on month 13, because 1 to 12 is usually manufacturers' warranties are covering the systems and appliances. So if you purchase a new construction home warranty with us, it kicks in automatically at month 13 and runs through month 48. So that buyer is getting 4 years of coverage for $800.
Yep.
Big deal. So you'll see those items on the information that I upload as well.
Excellent. Yeah, and by the way, I'm sorry to interrupt you, Cindy. I got corrected too when I closed the $940,000 deal. There's definitely different options that you can do, especially for luxury luxury sales and luxury listings along those lines where a 1 year may not be advantageous, especially if the seller's willing to cover it.
Yeah. You know, a little bit in that price range, it's like they're going to get the same type of coverage basically as a $300,000, $400,000 home. So I don't know, weigh it out, right?
Right. Right. Yep.
But we do have multiple years as well. So you can have a 12-month, 18, 24, up to 3 years of home warranty coverage too. And you'll see that in the information.
Cindy, question for you. Do you, I know Achosa allows us to call our own contractors. Do you ever have, I mean, do you pay right away, or is it a term payment to the contractors once they've finished the job?
If they are able to accept a Visa card over the phone, we pay them before they even leave the home and the homeowner is satisfied. Yes. Some situations they're not able to accept that payment over the phone, but that's the time within 48 hours a check goes out.
Okay. That's good to know.
Yes.
Because I know that that's a deal. Sometimes that's a make or break for some contractors that may be coming out. They don't want to have those 30-day terms, and therefore they won't take the job.
That's right. That's exactly right. Which is why we pay them when they're in the home, if they can take that payment. And most of them can. And something we haven't talked about, and I want to make sure that you're clear, if let's say you're getting a relocation and they don't know who to call, they're not on the Nextdoor app yet. They don't have a plumber or an electrician. We send them, we always ask them, do you have someone you can call? If the answer, we thought it was going to be 80-20, guys, it turns out to be 97-3. We thought 80-20. Oh, 80% of homeowners will have somebody to call. 20 will not. No. 97 say, yes, I do. And I would like to call my own person. So in 3% that don't have somebody to call, we send them 3 via email that are 4.5 star or higher rated for them to choose from in their zip code. Okay.
Excellent. Well, Cindy, thank you so much for your time and all the valuable information that you provided this morning. I'm going to go ahead and stop the recording. And my HVAC contractor just got here, so I'm going to go check in with him. But again, thank you. And another thing too, let me stop the recording. Thank you for being here, and thanks for tuning in.